Today we are talking about everything and anything around a bond or a mortgage. A lot of people have been asking me, TJ, is getting a bond a good idea, or should I just save up my money and go and buy a property cash? And I've been asking myself the question, what kind of a job do you do for you to go and save up your money? But also, I do want to stress out that I have seen people that have saved up their money and they have gone to buy a property cash with no bond or mortgage at all. So the question that I then want to answer today is that, is a bond bad or good? Right. That's the question that I really want us to talk about today, because if we look into these scenarios where debt is good and debt can be bad, then we also want to say, okay, fine, let's go and look into a particular instrument, a product like a bond, and then we say, how best can we make it a good bond, or can we make it a bad bond? I don't think that we want to intentionally make it a bad one, but let's then dive into it and talk about it. So the first thing that we want to address is, why would you actually go out there and get a bond or a mortgage, right? The only reason that you would want to do that, or if any other bank is going to give you a bond, is provided that you are going to be buying a property of sorts. And if you're going to be buying this particular property, it basically means that then they are going to give you this bond. The bond itself is not going to come into your back pocket, but the money is going to go into whoever who is selling the property. And this person could be a seller, could be a developer, but it doesn't really matter. But the bottom line is that the money does not come to you directly. So as the money has now exchanged hands and now you now carry the bond. Yes, it's called carrying the bond or carry the mortgage. So what it basically means that is now you now have to do a repayment. Sometimes a bond might come with a deposit that you might need to pay. So potentially you've paid a 10%, a 20% for you to unlock the difference of the money. But let's assume whatever the amount of money that has now come through to you, why did you go out and get it? And yes, we have defined this to be, you have to have a property. In most cases, these are residential properties. And for what reasons are you then buying it? It could be for a business reason. And reason number one, if we are saying that it is a business, then the other question that we want to ask ourselves is that, if you are getting a bond or a mortgage and it's for business reasons, we all know that when we jump into business, we want to be making some money, some moolah, enchiladas, cash, dollar, all of those things. And by the way, if you're one of those people who are doing business out of a mortgage or out of a bond, in the description, let me know. Give me some comments whether you are making money out of it or not. I want to hear from you, and so that we can all see that I am not the only one who is a little bit crazy who is making money out of a bond. So how do I then make money out of it? Well, if I make it as a business, I'm going to speak about the businesses that I do so that you can see for yourself that this can be done. But if you are doing the same thing, hey, I want to hear from you in the comments below. So as it is a business, number one, I can get a bond for, let's say, 1 million. And when I get that bond as a 1 million, I can go out then and I can find someone to rent out my property for, let's say, 12,000. In this case, I am going to be making a little bit of profit after I have paid for my bond. But is it enough for me to cover all my other expenses? And if the answer is yes, then yes, that business is making sense because I am getting money. And that's what I generally call an asset. Because this property that I've just bought using other people's money, or PM as they call it, I am making a little bit of money. But hold on, if it is giving me money, do we then classify this as a bad bond or a good bond? A bad mortgage or a good mortgage? Definitely in this case, you can see, ladies and gentlemen, this is a, in the description you can tell me. The other scenario then I want to also speak about is that how then can we classify a bond or a mortgage as bad? Right? In some cases, you may see that, woe done, you go and get a property, right? And you rent it out. But this time around, the same property, the same property for R1 million, for R1 million, you are only able to get a tenant who is paying you 8,000. And for that reason, you can see that someone else needs to top up. If your repayment is, let's say, on 11,000, like the example that we had on the good bond. So this one now we can safely say that it is a bad mortgage. But how did you get there? Why did you buy this? The first scenario we said is for the business purposes. The second scenario where we are now trying to classify this as a bad bond is now, let's assume that you are staying in this property or you have had to rent it out to someone else, but the rent versus the repayment, it is not at par. So it basically means that someone else now needs to subscribe to that. I have done that before. When I was coming up in my days, I didn't know about property investments very well, so I went on and I bought many properties and I used to subsidize. So every month I would top up the bond. Now that's a bad bond. It's a bad repayment strategy. But I also want to say that what if the same amount of money or the same amount of debt that you've gone to borrow, within this case, it is for a house. I also stay in a house. Stay in a beautiful house with many colors. You can see shades of pink. Yeah. In this particular property that I stay in, is it giving me profit? Well, the answer is no. Because in this particular property that I stay in, I have decided not to let any of the rooms out to Airbnb, short-term living. I have decided not to let out the back rooms, if I do have any back rooms. I have decided not to let out the cottage, if I have the cottage, because maybe I want to make it my office or something like that. So the bottom line is that now I am fully occupying this whole property of mine, and there is no any form of income that the property is bringing in. For that reason, my mortgage or the bond that I'm paying, all of it is out of my pocket. So is this a good or a bad mortgage? You can answer for yourself. But hold on. There is another benefit that we do not see. We all need somewhere to stay. I need somewhere to stay. So for that reason, yes, my bond could be a good bond because I have somewhere to stay. But what if I was able to have an income on top of me staying on this particular property? So let's assume I have a couple of cottages at the back, or let's assume I have a couple of rooms that I'm not utilizing. And in this period that I am staying within this property where I have this mortgage, can I turn my mortgage into a positive, into a good mortgage? Yes, I can. How can I do that? I can let out some of my rooms for other people to come in and they can pay me a little bit money. So if my bond was, let's say, sitting now at, let's say, 11,000 Rand, like we said on the other scenario, if I am collecting 5,000, if I'm collecting, let's say, 11,000 itself, it basically means that it's a good bond. So ladies and gentlemen, you can assess for yourself. The aim of this video is to assess for you, for yourself to assess on your case, on your situation, on your scenario, whether the bond or bonds or mortgages that you have. You might be like me, where back in the days at 4 or 5 bonds of like these ones, and none of them were giving me any income. So the question that you need to be asking yourself to assess, is your bond or a mortgage a bad or a good one? And in the comments, you can let me know, and we can try to turn that around for you so that it can be positive. Well, I've done this for many people. I can do it for you. My name is TJ, and thank you again for watching us on this channel. It'll be great to hear from you as we continue. We'll see you on the next video.